This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, June 7th, 2016. Euro dollar. So while we've seen a very impressive bounce in the euro over the past couple of sessions, it would be premature to qualify this as anything more than a corrective rally ahead of the next downside extension. There's some significant internal resistance up towards the 114 to 115 area, and while the market stalls ahead of there, there's risk for a lower top ahead of the next downside extension back below those recent lows that we saw at 110.98. Really only a close back above 11400 would compromise the current bearish outlook. Sterling dollar. So cable remains well capped into rallies, with the market showing it's stalling out again up towards and above 147 and ahead of 148. There's some key resistance up here at 147.70, and while the market holds below this level, the overall pressure remains on the downside. We've seen a lot of choppy price action now between some key support at 143.30 and that key resistance at 147.70, and ultimately a break on either end will be required for clear directional insight. Again, a break back above 147.70 would confirm or strengthen the possibility for the formation of a major medium-term base, while a break back below 143.33 would open the door for a renewed weakness, exposing initially 140, below which would expose the retest of those 7-year lows at 38.36. Dollar yen. So dollar yen has done a good job bouncing in recent trade after stalling out ahead of those key 2016 lows at 105.55. But overall, the downside pressure remains intact, and rallies are expected to be well capped ahead of 109, ahead of the next downside extension or continued weakness back towards that 105.55 2016 low. Ultimately, only back above 111.89 would really compromise the bearish outlook for dollar yen. Euro Swiss. So Euro Swiss has been mostly chopping around in recent trade, though overall we've seen a recovery off lows going back to the 2016 base at 108.10. At this point, the market should look to find a higher low ahead of the next upside extension beyond 1130 and towards a retest of the multi-month and 2016 peak at 112 further up. Aussie dollar. So Aussie has done a good job rallying in recent trade, with the market now trading back towards and slightly above some previous support and resistance in the 74.15 area. At this point, it will be interesting to see if the market can establish a close above 74.15. If we do, it could open the door for a more continued, a further correction up towards the 75 to 76 area, while inability to close above 74.15 would suggest that the market is looking in to put in a more immediate lower top ahead of a bearish continuation back below 71.45 and towards that 2016 base at 68.27. But the key takeaway here is that even if we extend further, the market is still classified as correcting, with the bearish outlook still intact. Dollar CAD. So dollar CAD has broken back down towards some key support at 27.72. Ultimately, the market has been showing signs of basing out and is expected to hold above 27.72 on a daily close basis in favor of the next upside push beyond 131.89 and towards 135 further up. Only a close below 127.72 would negate this newly adopted constructive outlook for dollar CAD. Kiwi dollar. So Kiwi has done a good job rallying in recent trade, though the market continues to be very well capped on rallies ahead of 70. At this point, it would take a break back above 70.54 to really compromise the overall bearish outlook, with the market expected to stall out yet again in favor of a next downside extension below those recent lows at 66.75 and towards 65.46, which guards against the 63.47 2016 low. SPX 500. So the S&P 500 is finally broken up to a fresh 2016 high and is now testing some key medium-term resistance up above 2100 and ahead of those record highs from 2015 at 2133. At this point, a break above 2133 would be required to open the door for fresh upside, while inability to take out that level will suggest another topside failure ahead of a bearish decline. At this point, though, the market would also need to take out 2020 to really confirm or strengthen the possibility for a major top and accelerate declines. Gold. So gold continues to be very well supported on dips, with this most recent setback supported at around the 1200 area. Ultimately, while the market holds above a previous resistance at 1190, the market is expected to continue to chop around with a bullish consolidation ahead of an eventual break higher back above the 2016 peak, just shy of the 2015 peak at 1307, and heading up towards 1400 further up.